This is Mid-Atlantic Women in Agriculture's Wednesday webinar, USDA FSA Loan Programs. Our presenter today is Amy Rowe, Farm Loan Officer Trainee with USDA FSA. Thank you to our sponsors, Mid-Atlantic Farm Credit, Delaware Department of Agriculture, USDA, and Maryland Department of Agriculture. This webinar, along with all upcoming and previous webinars, can be found at our website. Thank you for listening.
Credit FSA's farm loan programs offer a lot of different opportunities to start, improve, expand, transition, market, and strengthen family farming and ranching operations, and that's what we're here for. We can provide viable farming opportunities for our beginning farmers, minority farmers, and women producers. Also for value-added, direct sale, organic, and specialty crop operations, which I know is getting to be bigger and bigger. And then also we have youth loans, so we can also help young people actively involved in agricultural youth organizations. So, and those are really fun loan opportunities for our youth because it helps them start getting into the farming community. So FSA has two different loan programs. We have our direct loan program and our guaranteed loans. So with our direct loans, FSA makes and services direct loans and provides supervised credit. So we are actually making those loans. And the funds come from the U.S. Treasury. With guaranteed loans, the lender makes and services the loan, and FSA guarantees those loans made by the conventional lenders for up to 95% of any loss, typically 90%. So I always say with guaranteed loans, it's kind of like we're backing the bank, and we'll go into our different programs in a little more detail, but with guaranteed loans, you're really working with your lender. All right, so with our loan program delivery, the direct loan requests are processed and serviced in our local offices. So again, any of your FSA offices in your county can help you. And then our guaranteed requests are completed producers to FSA for. Of course, we can help you with any questions and help you complete the paperwork as well. So we have a couple of different types of loan programs in themselves. So our two big ones, of course, are farm ownership and farm operating loans. And we can do that with both direct and guaranteed programs. Oh, it sounds like maybe we have some background noise. Can everyone hear me pretty well?
I think Sarah's on twice. I'll take care of it. Keep going.
All right. So, and then we also have emergency loans, which is part of our direct programs. And then we also have land contracts and conservation loans that are part of our guaranteed programs. And like I said, we'll go into the specifics of each one. So we do have loan limitations. Our direct loan side has a lower loan limit than our guaranteed side. So with our direct loans, our max amount for both farm operating loans and farm ownership are both $300,000. And then for our micro loans, our limits are $50,000, and then the youth loans are $5,000. And of course, with our emergency loans, it is higher at $500,000, or the amount of loss, whichever is lower. And then for our guaranteed, we can actually go up to 1.399. So it's a great opportunity for any size of an operation to have an opportunity with FSA loans. So we do have some general eligibility requirements, and we have some specifics, especially when it comes to the direct loan side. But from a general eligibility requirements, one of the main things, and one of the key eligibility requirements, is to be unable to obtain sufficient credit elsewhere without FSA assistance. So we're really looking, maybe a good one usually is like farm credit. So maybe you don't have the down payment or the equity. This is where a guarantee may be able to help you. And then, of course, be a citizen or a legal resident alien, possess legal capacity to incur the loan obligation, and have acceptable credit history. And we look at credit as a whole, not just a score. So most typical lenders, have a score requirement where we look at your whole credit and really look at the whole package. And then be the owner-operator or tenant operator of a family farm after the loan is closed. And, of course, not be delinquent on a federal debt, student loans, taxes, that kind of thing. Not having outstanding unpaid judgments, not have caused the agency a loss by receiving debt forgiveness. And there are some exceptions, but that's the general rule. And not have been convicted of planting, cultivating, growing, producing, harvesting, or storing a controlled substance within the last 5 years. Another one is to not have violated the federal crop insurance policy. All right, so along with the general eligibility requirements, direct loan applicants must also have applicable education, training, or farm experience that provides reasonable prospects of success. Now, for a farm ownership loan with FSA, so a direct loan, we do require that you have participated in the business operations of a farm or ranch for at least 3 of the past out of 10 years. And one of those 3 years can actually be substituted for education, business management, military leadership experience. There's some things that we can do there. And then for an operating loan, it's actually 1 out of the past 5 years that you've participated in the business operation of a farm. And again, you can substitute that 1 year with the education, business management experience, etc. Anyone have any questions so far? All right. So also part of our application process is you have to develop a realistic farm business plan that projects repayment ability for the loan. You, as well as being eligible, you have to be feasible as well. So we're looking for a feasible farm business plan that projects repayment ability. And then provide adequate collateral for the loan, and that can be 100%. So if you're wanting to, say, buy a tractor, and I'll just do a ballpark number of $30,000, then if you're requesting a loan for $30,000, that adequate collateral would be the tractor that's valued at $30,000. Agree to take borrower training courses and graduate to private sector credit when able to do so. Those borrower training courses do include the ANES project, and we really like participating with ANES project because it is face-to-face, which sometimes is a little bit easier to learn and really gain some knowledgeable skills. Now, I said graduate to the private sector credit when able to do so, and we are hopefully a temporary source of credit. We want you to go way past our expectations, and a commercial lender want to actually refinance your loans. That's our goals and our objectives. And then, of course, we do have a restriction on years of eligibility. Once you've had so many loans with us in so many years, we do have that restriction. So if you have any questions about that, your local office can definitely help you. So we do make loans to not just individuals, but also to corporations, co-ops, joint operations, trusts, and partnerships. I will say one of the things is the members and stockholders must meet the program eligibility requirements. With entity applications or entity applicants that aren't joint operations, so a legal entity, the main operator is the one that has to meet the past farming experience requirement. So we will see a lot of LLCs that may be husband and wife, and maybe the wife has the experience or the husband has the experience, and they're going to be that main operator, and they will meet our eligibility requirements with farm experience. And then the entity must be also authorized to operate a farm in the state where the farm's located. Now to the fun stuff. All right, so we'll look at our different loan programs individually. With our direct loans, we have operating loans. Our operating loans are for annual operating loans as well as for term operating loans. So our annual operating loans are, of course, going to be production expenses, annual expenses, where our term operating loans are going to be for purchasing equipment, livestock, if it's brood livestock, and some of those things. Our operating loans are repaid in 1 to 7 years. It depends on the cash flow and the useful life of security. But for our term operating loans, we can go up to 7 years. And I will say one of the great parts of our program is we do have lower interest rate, and that's because we're the lender of first opportunity, right? And our current interest rate, so it's January 2017, our current interest rate for operating loans is 2.375. So it's really low, and it's a great opportunity to get started, or maybe if you're having a little trouble, to also kind of reboot. So next up, we're going to talk about microloans. Microloans are a newer program within the FSA system. Microloans are for farm ownership or operating loans, so they can be annual or term, that do not exceed $50,000. And so they're a simplified application process, and so it's a little more streamlined and less time-consuming. But so say, let's see, maybe you're getting off your feet and you want to do strawberries, and you're just requesting $30,000 or $40,000. This could be a good way for you to start with your FSA process. Alternative managerial requirements for microloans for OLs may be acceptable. The farm ownership still requires 3 years of farm experience in the last 10 years. All right, our other big one, it's going to be our farm ownership loans. And so we have a couple of different programs within the farm ownership loans. I know there's a lot of different programs. But our farm ownership loans are going to be to purchase land, make capital improvements, promote soil and water conservation. We can also pay for loan closing and related expenses as well. I will say the big one is direct loans cannot be used to refinance real estate, but we can, again, purchase real estate. Our terms are up to 40 years, and again, it's dependent on the cash flow and the useful life of security. For most of our poultry loans, for new houses, we typically don't go more than 20 years. It's between 15 and 20 years. But again, that's all dependent on your loan request. Our farm ownership interest rate this month is 3.625. So for ag lending, for purchasing cropland, especially cropland or land in general that doesn't have any improvements or anything like that, it's a great interest rate. So we also have our down payment loans. They're it's a fun program, and it's a great interest rate as well. So the applicants must be a beginning farmer, and that just means you've been farming for 10 years or less, or you're a targeted underserved or SDA, so socially disadvantaged applicant, and provide a minimum 5% cash down payment. So the total financing by FSA and all other lenders cannot exceed 95%. And so down payment loans from a direct side will not exceed 45% of the lesser of the purchase price or the appraised value to be farmed. Again, the maximum loan amount is going to be $300,000. And with that, we have some different terms. So our maximum FSA term for a down payment loan is 20 years. And this is the great part. Our interest rate, because our interest rates are so low, it is 1.5%. So really great opportunity. And then FSA can guarantee the balance with that other joint financing partner. With our guarantee program, a guarantee fee is charged, and so since it's also a participation loan with FSA, no guarantee fee will be charged, and there's no limit on the purchase price of the property. We can only go to our max. So, of course, we have joint financing, and we really enjoy and encourage using joint financing arrangements where an applicant obtains financing from another lender. It can be a commercial lender, it can be a state program, so like for Maryland, Marbibco, or the seller of the farm. So I know there's some landowners that will sell and will have a financing agreement, and we can definitely work with them with that. Applicant will use this financing along with FSA financing for any authorized FO purposes. And depending on what it is, we can do any kind of arrangement with joint financing. If the FSA loan doesn't exceed 50%, the interest rate, especially right now, is 2.5% because we're so low. But we do a lot of joint financing loans. I will say, not sure what the audience is today, but we do, at least in my office that I work in, we do a lot of joint financing loans for poultry operations. So, as y'all know, it is hard to have a full down payment, depending on what the lender requests, but usually it's about 20%, right? And poultry is expensive to get into new houses. So, say it costs $1.5 million, 20%, that's a lot. And we can actually use our joint financing loans to help the commercial lender with their down payment request or down payment requirements within their lending institute. So, does anybody have any questions about our farm ownership, our operating loan programs? Those are our two biggest ones that we do from a direct loan perspective. I'm just wowing everyone with information. All right. So, the time frame for the loan program, that's a good question. We get that a good bit. So, technically, from a complete application, we have 60 days to make a loan approval. Hopefully it's a lot less than that. I will say it depends on what the loan request is for. Because we're a government agency, we're not allowed to adversely affect the environment. Surprise, surprise. So we do, if there is major ground disturbance, we sometimes have to do an environmental assessment, and that takes a little bit of time. But if you're just wanting to purchase real estate for crops, or if you're doing equipment or brood livestock or any kind of livestock, the max we have to approve is 60 days. Of course, we like to get it down to less than 30 days. But 60 days is our to approval once we have a complete application. And then usually it takes maybe 2 or 3 weeks, depending on what it is, if it's a farm ownership or an operating loan, to close. But we definitely try to get things done as quickly but effectively as possible. So. Looks like Susan. Okay. So we also have emergency loans. Our emergency loans are going to be used for real estate or operating purposes where a disaster or quarantine has been declared. Hopefully there's not a quarantine. It's typically a disaster. For our purposes, it's going to be to refinance debts or repair and replace farm property. It can also be for any kind of operating as well, annual operating expenses. We have production loans, annual production loans, and then actual losses, which again are buildings, so your barns, etc. So. Now this is going to be the fun part. We're going to talk about application tips. Like any good agent or government agency, our application can be a bit confusing, and any of our Farm Service agency officers, loan officials, anyone in any FSA office can help you. We also get a lot of help from Extension or some of our state programs, but you know, it can be a little confusing, not gonna lie. But from an application tips perspective, it's really about what are you wanting to do and what's your plan to accomplish the goals. So you need to have those goals. You need to plan. Think about it conservatively. I will say that Extension has some great budgets for all sorts of different operations. It's not going to be just cow-calf or poultry. I mean, tons of different vegetables and crops like that, and they're a really good resource as well. If you're currently farming, you know, have good records to support your production projections, and have good financial records as well. That's something that we really look at as past history. And of course, you know, if you're a new operator, what is, you know, the average? What's the general realistic look at a farm business plan? So, of course, you can ask any FSA employee to help you with the paperwork. Depending on what kind of loan you're going to be requesting, depends on what the paperwork looks like. But one of the main things is going to be completing your balance sheet, as well as completing your projected income and expenses. You know, we're really looking to see what you're doing, what you want to do, and how you're going to accomplish it. And again, you can see other sources of free assistance, Extension, USDA outreach grant recipient organizations, which is Annie's project. All of those can be great resources to use. So when you're submitting a direct loan, you'll actually submit it to your local FSA office. And we do have applications in our FSA office, but you can also find them online, fsa.usda.gov. And at the end of the presentation, it actually has a list of websites. One of them is actually our fact sheets as well, which you can get more information on. We are listed in the telephone directory. You can Google us. Everybody can be Googled, right? But you can contact us anyway. And of course, no one can be denied an application or other forms. We're here to help. So that's all I have for direct loans. So if you have any questions about direct loans, we may want to cover it right quick before we get into guaranteed loans. So personal guarantees required for those that have a business entity. Yes, so if you are applying as an entity, you're also going to be applying as an individual, or you know, it's going to be the entity as well as the individuals in the entity listed on the promissory notes and those kind of things. So we want you to apply how you're operating, but those individuals in the entity will also be responsible for the loan as well. All right, so our guaranteed loan program. Our guaranteed loans are made and serviced by a local ag lender. They're funded by the lender. They're used by lenders to assist producers who don't meet normal underwriting standards. And so that's like I was talking about before. Maybe it's down payment, maybe it's equity. It could be a lot of different things, and having an FSA guarantee may help meet those normal underwriting standards, or maybe not necessarily meet, but help with the loan package in general. Again, it's like we're backing the bank. That's my favorite term. So, to qualify for an FSA guarantee, You have to meet the general eligibility requirements and be unable to obtain a loan without a guarantee. Of course, the plan has to be feasible and adequate collateral, again, as determined by the lender. And you're actually, again, applying with a commercial lender who participates in our guaranteed loan program. Now, I will say our guaranteed loan program, it's going to be any lender that makes an ag loan or that makes agricultural loans can typically be in the guaranteed loan program. And I'm on the eastern shore of Maryland, so there's definitely other lenders out there. But some of the lenders we work with are like Mid-Atlantic Farm Credit, First Financial Bank, M&T. So it's a variety of different lenders that we work with. And if you work with any lender or know of any lender that might be interested, definitely have them call the local office or the state office with any questions. We can definitely help with that. So again, there's multiple FSA guaranteed farm loan programs. Again, there's the farm ownership loans, so purchasing real estate, any kind of improvements, real estate improvements, anything like that. And then our farm operating loans, so that's going to be more for term purposes, so your equipment, livestock, etc. And then with the guaranteed farm loan side, their operating loans also include operating lines of credit. So that's kind of nice because that's not going to be something like with the direct side where you're applying every year for an annual loan. These operating lines of credit are actually valid for, I believe, 5 years. I haven't done one in a while, but you have more of a time frame with that. And then we do land contracts, conservation loans, so a multitude of different programs. The big one here is the interest rate a lender charges must not exceed what the lender would normally charge its average farm customer. It can be fixed or variable, but the main thing is that what they do for any other ag customer or farm customer is what they do with our guaranteed loans as well. So any questions about our guaranteed loan program before we get into kind of just some general information? All right. So just some fun facts, for lack of better terms. But loan programs are funded by the annual congressional appropriations. So we are funded by the federal government. And appropriation levels may fall short of demand, especially direct farm ownership loans. It does happen sometimes, but please go ahead and apply. Just because we may not have funds right now doesn't mean we don't want you to apply, get approved, and get put on basically a waiting list. But, you know, we do typically get more funds. It just may take a little bit. Loan funds are allocated to the different states, so each state has their own allocation. And there are separate allocations for targeted underserved farmers and ranchers and beginning farmer targeted funds. So we'll get into what those definitions are as well. So a targeted underserved applicant, it's defined by law as one who's a member of an underserved group whose members have been subject to racial, ethnic, or gender prejudice because of their identity as a member of a group without regard to their individual qualities. And you can see what some of our targeted underserved groups are. So we don't have a specific targeted underserved applicant loan program, but rather just targeting funds for those existing programs, so our farm ownership, our operating loan programs, to applicants that meet the definition. So there's not a targeted underserved loan, but you're going to, say, apply for a farm ownership loan and you're a targeted underserved applicant. So your funds would be a different allocation or a different appropriation. Targets are set by law, and targeted underserved loan applicants must meet loan program requirements. So everything's the same, it's just where we get our funds. Beginning farmer, FSA provides direct and guaranteed loans to beginning farmers and ranchers, and we target a portion of its direct and guaranteed FO and OL funds to beginning farmers. Again, not a different loan program, just how funding is appropriated. And this is just some general information about our beginning farmer loans. There is not, Karen was asking, is there an age limit for the beginning farmer loans? And there's not an age limit. Has not operated a farm or ranch for more than 10 years. That's our definition of beginning farmer. So there's not someone who's 40 or less or anything like that. You have to also meet the loan eligibility requirements of the program. And there is one key for an FO loan, so a farm ownership loan. It would be that they do not own a farm greater than 30% of the average size farm in the county. And we have the averages in our office, so we can definitely help with that if anyone has any questions. And again, it depends on your county and your state. So, all right. So we're really wrapping up. This was the last slide that I was talking about for any kind of information that you may need. Of course, contact your local FSA office. Our website has a lot of different information as well. And some of my favorite ones are actually these fact sheets that you can see for additional information. Really good information sheets to review and look at some of our loan programs. Any questions, anyone? No, it's a lot of information. I probably went a little fast, but hopefully you're a little more comfortable with our direct and guaranteed loan programs as well. All right. Well, if anyone doesn't have any questions, again, the slides are posted in the pod below and available on the website. And if you just think you might have an interest, please come into your local FSA office. So it does look like there's one question. So it's, do you have to have other employment to get a loan? And no, you can be a full-time farmer. And the main thing is that it's feasible, right? So that everything cash flows with your owner withdrawal as well as any of your operating expenses. So we make a good many loans to full-time farmers as well.
Thank you for watching our archived presentation of our Wednesday webinar. If you would like to see more archived Wednesday webinars, please visit our YouTube channel. Or to find a schedule of upcoming live webinars, visit our website.